Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, interest rates were a little bit worse this week, and we did see some pretty weak numbers come in on the housing sector, and that's primarily due to this cold weather that we've been having. But I'll get to that in a little bit. But again, interest rates drifted a little bit worse, and that was primarily due to the stock market doing a little bit better, and that was in the face of actually some pretty tepid and sometimes weak economic data. The stock market is continuing to just do pretty well, so that is causing interest rates to drift a little bit worse. So this is what we received from the economic front. We saw Producer Price Index, which that measures inflation at the wholesale level, and that was in line with expectations. It showed an increase of about 0.2% at the regular level as well as the core level, so virtually no inflation there. Consumer Price Index, which measures inflation at the consumer level, that only showed an increase of 0.1%, also pretty weak from an inflation front, so that is good typically for interest rates, but didn't really help interest rates a whole lot. We also saw the Empire State Manufacturer Index. That came out and that showed actually a pretty big decrease. It dropped about 4 points, and that was more than what was expected. But now on the housing front, we saw a lot of data that came out on the housing front, and that showed some real weakness. We did see the Home Builder Composite Index, and that measures sentiment with home builders. That dropped 10 points. It was at 56, now it's at 46, and again, that just measures how builders are feeling based upon traffic coming into models and just the overall activity, and they're not feeling very good. That dropped. We also saw building permits. That fell by 5%, so again, a pretty big drop there. The MBA Purchase Index for purchase applications, that came in again, and we've seen some falling of this number. That again fell by 6.3%, so less people out there applying for purchase money transactions, and that just measures applications. And then today we saw existing home sales come in, and that showed that existing home sales were worse than expected. The market was expecting about 4.75 million annualized units. It actually came in at 4.63, and last month it showed actually an increase of about 4.87. So the 4.62 million actually this month was a lot worse than expected. So that's all been really blamed on all of this cold weather, snow that the country has been having, primarily in the east and south. It hasn't really affected us too much. It's winter, so we haven't had a horrible winter. And the West Coast has actually done pretty well, but it's mainly in the east, and that's in the south, and that's where the primary concentration of population is. So we'll see if that really continues, and it's going to, we're going to need to see some really good numbers here once this weather gets better. Otherwise, it's really going to lead to showing that there is some overall weakness in the housing front. So that's what happened with interest rates. If you guys have any questions, please give us a call. Thanks so much for joining me with Java with Jared. We'll talk to you soon, and I hope you have a very wonderful week. Bye-bye.